Equity Mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity.
Welcome to another episode of Equity Mates, a podcast where we help you learn to invest in 20 minutes or less. We break down the world of investing from beginning to dividend so that you can hopefully make some returns. My name's Bryce, and for the very first time this year, I'm joined by Ren in the room. Is that right?
Yes. Most listeners probably won't realise the difference, but yeah,
True.
For us, we're together once again.
Ren's up in Sydney. Good to have him in the podcast room, recording live rather than over Skype. So, have the Swans played this week?
Yeah, we
Yes.
lost to Melbourne. Yeah.
Oh, that's right. Devo.
You're just on cloud nine because you finally got a win.
This is true.
Well, 2 wins in a row.
Bombers
maybe.
were up. Bombers were up.
Yeah.
Well, Ren, we're not here to talk footy as much as we would like to, and we are planning to do a football podcast to rival that of the AFL. We're here to talk all things Australia's next top trader. We are into the last week, starting the last week of competition. So as always, we're going to wrap up what was week 5, have a look at how we performed, how our portfolios went, what happened on the US markets, and then have a chat about what's coming. We're almost at the end of the competition. It's been massive.
We are, yeah. It's been a good 5 weeks. It's been a great 5 weeks for the US markets as well. So if you were picking a time to do a trading competition, we picked a good spot.
Couldn't have picked it better, actually.
I might just touch wood because we might have jinxed it for week 6.
Yeah, well, for all those beginners who have got in and made a trade and have been successful off the back of a pretty strong bull market since December, then it's been a good, but I wouldn't say, what's the word I'm looking for? I don't know. Not whatever. Anyway, we'll cut that bit out. But
No, we'll leave it in. Anyway, talking about good but not great, let's talk about our personal performances in the rankings.
Okay.
And I'm very excited to get to this because
I know you are.
so to give everyone a recap of last week at the end of week 4, you were ranked 361 and I was ranked 138. I have managed to consolidate my lead in the next week. I am up 25 spots. I'm now ranked 113, and you unfortunately fell 23 spots, and you are now 384.
Oh.
So if we have a look at overall, I'm up 2.19%, and you're down 2.62%. So I'm just slowly broadening that gap. That's all that I care about.
I know, Ren.
Oh, have I told you that already?
So 2.62% I'm down,
Yeah.
and I'm ranked 384th. Overall, I think that's a pretty good performance from everyone if I'm towards the bottom of the leaderboard and my losses are only 2.5%.
Yeah, well, there's a fair few people below you still, but yeah.
Okay. Apologies to all those below, but all right. Well, let's dive into that, Ren. I will go first because my portfolio is performing the worst. We'll let you come home with the goods. I actually placed a few trades last week.
Yeah.
So I'm still in my QQQ and my Russell, but then I got into a gold miner, Sibanye Gold Limited, purely based on some technicals there. So I threw 200 into that, or 250. And I'm down 20%.
Oh, no.
So luckily I've got a stop loss in, but I'm going to see how that plays out. So it's down 20. My QQQ up 15. Went in long on oil again.
Yep.
It's down 0.86%. And I went long on Essentia.
Okay.
Based on a technical performance indicator as well. 200-day moving average, 20-day moving average, all-time high, and above volume were the 4 things that I looked at. And they'd also had some solid reporting, and it's sort of booming at the moment. So I've jumped in on that. At the moment, it's up 0.5%. So I'll ride them out. Got stop losses on all of them. So yeah, that's my portfolio at the moment.
Nice one. That 20% fall kills you.
I know.
Yeah.
Dead. Well, yeah, so that's where I've got my negative 2% return because if you look at the rest, I mean, QQQ up 15%, mainly because it follows the NASDAQ, which I think is up 16% or so this year.
Yeah.
So how's yours looking?
So I think we were interviewed this week, and one thing I said that investing is this one field where laziness is a virtue. And I have embodied that once again. After we recorded our episode last week, I talked about putting a trade on a 3x, so 3 times leveraged inverse ETF for the US financial sector.
Yes.
So essentially, I was making a big bet on the US financial sector falling. Well, JP Morgan had a great report this week. They reported record revenue and record net income for Q1 2019. So
Couldn't have been more wrong.
the US financial sector didn't have a bad week. In fact, it had a pretty good week, and it was up 2.1% of the sector overall for the week. So I got hurt on my 3 times leveraged short position on the US financial sector. And
By how much?
I was down 5.42% for the week. So I didn't actually have a stop loss on. Again, laziness.
But 5% for a leverage product, not too bad.
Yeah.
At the end of the day.
The good thing for me is that Dell is still sitting in there, haven't been stopped out on it yet, over 5% up on that. So just, ticking away. I'm just going to really consolidate what I'm doing. I'll probably sell the 3 times leveraged financial product and instead might get into something a little bit more vanilla just to ride out the last week of the competition and make sure I don't lose.
To me.
To you. Yeah.
Okay. So I've really got to go YOLO here and put in a Hail Mary of a trade, I think.
so, yeah.
And really get it done. Hopefully I can crack into the 200s because that'd be a massive move.
Yeah, it'd be pretty embarrassing if you're hosting this competition and you're not even in the top half.
No, it's a good cross-section of what can happen to
Yeah,
investors.
true. At least I'm in the top 25%. So
True.
I'll take that.
True.
Yeah.
So Pramesh is our leader. He's on top at 36.5%. Our leading university player is Adrian, who has been sitting in second for a while now, up 28.84%. So some really good gains there. Then we've got Jordan third. He's come up the leaderboard from University of New South Wales, up 21%. And Amir 21% as well from University of Technology, Sydney. So the top 4 all really fighting it out this week, Ren, and to see who is going to take the major prize of a trip to New York City and tour of the New York Stock Exchange.
Yeah. I think it's interesting that week 1, when we did this update, our number 1 performer was, 29% up or something?
Something like that, yeah.
Yeah, and, we're 4 or 5 weeks later, and our number 1 is at 36%.
Yeah.
It just shows how you can have those great weeks and you can pick those great stocks, but consolidating it and growing it over a long period of time is difficult.
Yeah. Ups and downs.
So it really means, if week 1 someone can make 30% in a week, basically anyone, maybe except for you, is in with a shot.
This is true. We've reached out to the top 20 to get some information. I'm interested to know if these guys are still in their stocks or if they've just sold out and are sitting there playing a bit of catch me if you can.
Oh, yeah. Interesting. Yeah,
So-
that would be a tough choice.
Yeah.
Luckily, we don't have to make it.
That is correct. So, Ren, Easter Saturday, this Saturday, the 20th, is when we will be finishing the competition. Shuts after the markets close. The competition ends after the markets close on Saturday morning, and we will then reveal the winner the week following that.
Yeah.
We'll shut down the leaderboard, and really looking forward to seeing who wins.
Well, I think we'll shut down the leaderboard at some point this week.
Yeah.
Yeah.
So that's a wrap of our portfolio. What about the stocks and the US market overall? We spoke last week about how the S&P 500 and the NASDAQ has been booming,
Yeah.
or hitting record highs.
Yeah.
That trend continued this
Does.
week. So the NASDAQ was up 0.82%, but it was pushed up on Friday by the tech stocks and hit record highs.
Mm-hmm.
So above that that mark that it was hitting before the December fall.
Mm-hmm.
So as we've discussed many times, if you'd got in during December, you'd be sitting very pretty.
Yep.
The S&P 500 was up 0.6%. Again, continuing its bull run.
Yep.
And I've got a couple of companies that performed really well last week, Ren, and one that we've spoken about before, and that's Walt Disney. It had a kicker of a week, up 11.5% on Friday alone, due to some talks in discussion of bidding for 21st Century Fox media assets, from what I understand.
No, so it has already purchased those assets, which is things like, Marvel and all that stuff. So that's all owned by Disney now. It actually announced its new streaming service, Disney Plus.
Oh, yeah.
So that's been in talks for a while. They pulled their content off Netflix maybe 6 months ago or so. If you've got Stan in Australia now, that's why you've got all the Disney stuff there.
Yeah.
So they announced Disney Plus. It's going to be $6.99 a month, and it's going to have all of...
US?
US, yeah. And it's going to have all of Disney's back catalogue, obviously, and all of 21st Century Fox's. So if you think about what that means, it's like Disney, Star Wars, Marvel, all that stuff, all those kids' cartoons, Lion King, all that stuff. So there's a whole lot of stuff on there. And then they've been making a concerted push into streaming specific content. So some of the stuff that Disney are producing now is being produced not for cinemas or for anything like that, but or for like the Disney Channel, their cable channel, but specifically for the streaming service. And so it'll be, rather than if you're doing a cable show, it's got to be 30 minutes long with a few ads in between, and if you're doing a movie, it's got to be 2 hours long, and stuff like that. Whereas with streaming, you have more flexibility. So it'll be interesting to see what they do in that space. But yeah, so they announced it. Market went up. I reckon if you're a parent and you've got kids, you can pay $6.99 to just get all the kids' content that you want. I reckon a lot of people will do it.
Yeah.
It's interesting though. Like, there's a broader discussion, probably one that we can have some other time. If every different service has their own streaming service, it kind of defeats the point of it.
Yeah, I was talking about this with Seamus on Friday as well. It's getting to a point now where you need to be signing up to so many, and it's just it's almost off-putting now. It's just like, I don't want to pay for Netflix, I don't want to pay for that as well to get all the content that I want. And apparently piracy now is starting to go up because people are like, well, I don't have to pay for all of these services, so I'm just going to start illegally downloading it again.
And if you think about it, in Australia now, like, we don't even have as many as America, but we have Stan, Netflix, Foxtel, Amazon, this Disney one will come out soon. And there's probably more that I'm not thinking of. And it's like, who wants to buy 5 subscriptions?
Apple.
Yeah. The thing with, the great thing with Spotify and Apple Music is that they don't have exclusive rights to the music. Like, if you want to listen to the Red Hot Chili Peppers, you can have a Spotify subscription or a Apple Music subscription, and you can listen to it. Whereas, the analogy here would be that these music streaming services fight for different bands, and every brand is an exclusive right. Yeah.
Every band.
Yeah. I get why they do it, but it's frustrating for the consumer.
Yeah, it's not ideal.
Anyway, that's let's get back to the market. Any other good performers this week?
2 top performing stocks on stake this week, Ren. 2 that I hadn't heard of. Phunware Inc. Is engaged in managing and monetizing mobile audiences through multi-screen as a service platform. Now, I had never heard of MAAS. We know what SaaS is, software as a service. They're up 42%. And Anadarko Petroleum Corporation engaged in the exploration, development, production, and marketing of oil and gas properties. So both of those up in the 40%.
So I'm pretty sure that second one is up because Chevron are looking to buy it. And the Permian Basin, I'm pretty sure it's called, is the most productive oil and gas field in the world, and it's in the United States. And Chevron are looking to buy that company because then they'll have like a 70-mile continuous plot of land in that basin to drill. But it's interesting because another company whose name escapes me put in a bid for that as well, and Chevron's bid was lower, and yet the board are taking Chevron's bid, I'm pretty sure, is the story there. So it's interesting that, as a shareholder, you want to maximize your returns, but it seems like the company board are selling to a lower offer because the long-term potential is better. So anyway, that's an interesting story.
Yeah, nice. Okay. What about from your point of view?
So I had Disney as well. That was definitely the big news. The other one that we touched on was JP Morgan, had a really strong earnings report, which probably bodes well for the rest of the US financial sector. Some of the bad ones for me, the US healthcare sector had a rough week. There's a lot of uncertainty in that market at the moment because of the repeal of the Affordable Care Act, and there's growing talk on both sides of the aisle, so in Republicans and Democrats, on how to bring down the cost of prescription drugs, which is obviously an anchor on that industry. And there's even, some of the US presidential candidates are talking about how do we get rid of private health insurance completely. So there's a lot of uncertainty in that sector, and it was down 2.4% for the week. So that was a tough one. And then one notable one that we might talk about more in an episode some other time, and I don't think they're on stake yet, but they only IPO'd this week, so they might be coming on in the coming days. The first Africa-focused tech company to launch on any global exchange launched on the New York Stock Exchange this week. Yeah. The company's called Jumia, Jumia, and it was up 75% on the first day of trading.
Wow.
So if you would put all your money in that on stake, you would be winning the comp.
Yeah. But as all things IPO, will it continue, or will people start taking all of the massive profits that they've made?
Yeah.
So what is it?
Well, let's leave our listeners in a bit of suspense. We might do an episode on it a bit later where we'll break down what it is and why it's important. But for the purposes of this, what's hot and what's not, let's just leave it at it was very hot.
Yes.
Yeah.
Okay.
Yeah.
Let's leave it there. Now, we're hopefully going to be checking in with Matt as well to get his view on the last week and what's going to be coming in the next week, going into the last 5 days of trading for the competition. A lot of the recommendations or stock picks that he's had on his watch list over the last 6 weeks have actually performed very well. So if you're needing some ideas, then certainly listen to what he has to say.
Yeah, and it's actually his birthday today.
Yeah,
so
true.
Happy birthday, Matt. We hope that the market is kind to you on your birthday week.
All right, Ren, well, let's leave it there. Massive week coming up. I'm going to put in a YOLO trade and hopefully bring it home. If I do manage to beat it, it's going to be an amazing story.
Oh, amazing. They'll write books about it. You're really Stephen Bradbury, this competition.
All right, well, let's leave it there and we'll chat next week when we wrap it all up.
Sounds good.
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.
Equity Mates.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.